Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about Jerome Powell and the US job market. So the news has recently come out that during the recent Federal Reserve meeting, Jerome Powell has refused to cut rates. He said that, yes, we are going to be looking to cut them in September, maybe looking to cut them, because he clearly said that we're going to be now focused not only on inflation, that is the price rise, but at the same time, we're going to be focused on employment. All the previous meetings, he always emphasized on price rise. This is the first meeting where he's actually said, we have two goals. One is to prevent unemployment from climbing too high, and the other goal, which is to keep the price rise halted. So today there's been a marked shift. Most people in the market are wondering what's going on because they expected a rate cut of 0.25% this time. That didn't happen. And now most analysts are saying maybe Jerome Powell has gotten a little late because the fact of the matter is that the unemployment rate has creeped up a little bit by 0.4%. Not much, but it is definitely a noticeable shift up because as of late, the unemployment figure has remained quite robust in the US, where it's remained at a solid number. But recently it has been ticking upwards. And this could be concerning because a lot of market watchers have been expecting a recession after record high interest rates at 5.5%. So today, it seems like Jerome Powell may have been late to the bus and he may have to cut by a lot more than 0.25 in the next round. That's the going opinion. And if you look at the stock market in the US, the Nasdaq as well as the Sensex have been hit. They're down about 2.4% in the Nasdaq and 1.4% in the S&P 500, which was in the last day of trading before recording this video. So the question then becomes, is Jerome Powell late? Are things really that doom and gloom in the US? Does this immediately mean that because he didn't cut rates this time, are we going to see a recession? Is the unemployment figure a really troubling one? So what do you think about this so far?
Well, I think markets are like little children. They constantly demand, want. There's always a list of things these guys always keep wanting. As far as the Fed is concerned, he's always said very clearly that the only tool they have is the interest rate. And there's like a huge sledgehammer. It is not a precision surgeon's knife. So he has to be very careful when he decides to deploy the sledgehammer. Because the problem with the sledgehammer is when you swing it, it hits everything.
Yeah.
So when he decides to cut rate, it has other implications too. It is just not inflation. It has a wide range of effects when he starts moving interest rates. So that is his consideration. He really doesn't care about the stock market. He really doesn't care about what's happening in Wall Street. Or in global scenario also, it really doesn't bother him much. His first primary concern is the American people and their affordability to food and basic services, and keeping that in mind is what he moves towards. And of course, being employed is the most critical thing. If you don't have a salary, you cannot spend. So this is something he is concerned about. And markets react very violently, knee-jerk reactions when this happens. When we saw the Japanese market moving aggressively by 6%, I think is moved. And it's understandable, because a lot of foreign investors are in Japan. That is the main reason for that movement. The Indian market did not move so much because our market, as foreign investors keep pulling out, our Indian investors keep running in.
Yeah.
So there's one seesaw happening here.
Yeah.
But in the Japanese market, domestic participation in their market is much smaller compared to foreign investors. So when the dollar strengthening and weakening starts giving them jitters because the interest rate strengthens and weakens the dollar.
Yeah.
We saw tidal shift happening in their market. So when more clarity comes in this week, we'll probably see the Japanese market moving again back to where it was.
Yeah.
Because there's no fundamental change economically or any company seismic change.
Well, the relationship between Japan and US in terms of their macroeconomics has sort of changed because now Japanese interest rates are ticking up and people are expecting.
It's ticked up.
Yeah.
They're expecting it to tick up some more.
Yes. The expectation is the key point.
Yeah,
here.
same thing, the same problem in the US.
Yeah.
They're expecting the Fed to have cut interest rate. Now
Yes.
they're saying he's missed an opportunity.
Yeah.
So the next cut will be a big cut.
In September.
Yes. And we have heard this seesaw story about the Fed interest rates, market analysts saying this for last 2 years.
Yeah.
Since the rates have been going up. First they said it will not go up no matter what. Then it started going up. They said no, it will stop here. Then it went up some more.
Yeah.
Then they said, oh my God. Then they said no, now it will start cutting. They'll definitely start coming. Cut.
Yeah.
Nothing was cutting. So he's the only person who knows if the interest rate is moving any direction is
Jerome Powell.
nobody else knows.
And he's taking it as it comes because if you actually look at it in the long run, this data isn't really saying that the economy is done for. I mean, this data just says that yes, things are slowing down a little bit. But this economy is already accelerating quite a bit before. So this slowing down comes in the context of an accelerating economy. It's one thing for a car moving at 10 kilometers per hour to slow down. And it's another thing for a car moving at 80 kilometers per hour to slow down.
I agree completely.
Yeah.
And I do think he wants to be cautious because he doesn't want the economy to run away.
Yeah.
And that's possible.
And the minute you take your foot off the brake, immediately the market is going to probably take it up further. I mean, there's no guarantee that it won't.
Correct.
Because Jerome Powell, in his position, he doesn't have that luxury to take that risk.
And the worst thing for him is this economy is not going at a runaway speed on a straight road with no distractions on either side. Just zooming down an absolute straight road like in the Mojave Desert.
Yeah.
This is on a knife's edge. It's like hanging on the cliffs of Italy. On Sorrento, it's like driving like James Bond down because the global situation is such.
Yeah.
If you see where China is right now, if you see where Russia is right now, you see where Europe is right now, on top of it all that, there's an American election happening. And it's getting more and more polarized in all situations. So it just takes one stupid actor somewhere doing something crazy to set everything tumbling down.
Yeah, and interestingly enough, both the candidates are inflationary in their policy suggestions.
Correct.
So Jerome Powell can't in his good conscience sit there and try to cut interest rates when it's not a guarantee that...
Because he needs this cushion.
Yes.
Because if something does happen, God forbid, the only thing tool he has is...
to keep interest rates up.
Yes.
Yeah. And if he lets go too soon and, either Donald Trump or Kamala Harris comes into power and they pursue inflationary policies, then he's lost his ability to tame inflation because the inflation is going to come in and it's going to come in hard.
And it's going to come in very hard because see what's happening in Israel.
Yeah.
What he's trying to do. No matter how much people around the world, all other actors are trying to dampen it down, saying, let's not escalate. You have one rogue guy who's decided no matter what, I'm escalating this.
Yeah.
And we know who we're talking about. So I don't need to mention names. And he's hell-bent to take us there. He's like, no, even if you don't want it, I'm doing it.
Yeah.
And Americans are being forced into it. They're sending their fleets now. Aircraft carriers are going to the Middle East.
Yeah.
Because he's forcing all other players on the table, he's forcing their hand. He's making a call when there's no need to call. And if you take that, and Americans are forced to put boots on the ground, you can imagine how fast this will escalate. And you can imagine how much the American government will have to borrow and finance this.
Yes, and all of that leads to inflation.
Correct.
And even if we have the other party come into power, Donald Trump, if he comes into power and he says, look, I'm done with, other countries, I'm going to focus inwards. What do you think trade tariffs are going to do? Tariffs are going to promote retaliation. You have retaliation, your costs are going to go up anyway.
Baba, the funny thing is, as far as the Middle East is concerned, even if Trump comes to power, whomever is in power, they will have no choice but to participate. Even if Trump comes to power, he can deny Russia, he can deny Ukraine, he can deny China, Taiwan, but he cannot deny the Middle East because his hands are tied. Because if America says, we are not participating in the Middle East, that thing will be over faster than a flash in a pan.
Yeah.
The only reason it is not flashed in the pan is because Big Brother is standing behind Little Brother.
Yeah.
If Big Brother decides to sit it out, then Little Brother has a big problem.
Yeah. So that's a recap of what's going on. And
No, this explains why markets are volatile as they are.
yeah, they are. And the thing is, when markets are volatile, you are bound to get more opportunities to buy things for bargains, because
Yes.
the market will misprice things a lot more, because there's a lot of things going on. It's going to be an opportunity for all of us who are long-term investors to pick stocks at the right moment when they're being battered by the market.
And please make sure it's just not picking stocks at the right moment, it's picking the right stocks at the right moment.
Yeah.
So you cannot just randomly pick up everything which falls to the ground. You have to be careful in what you do decide to pick up when things fall to the ground.
Right. So that being said, thank you for watching this video. If you liked it, please hit the like button. Please share it with your friends and family members if you think they can have some value to gain out of this video. If you haven't subscribed already, please subscribe to our channel. Finally, if there are any opinions you'd like to express, please leave them in the comment section below. We do make it a point to read all of your comments. Thank you again for watching. Be rich.
Thank you.
I told you about visiting Singapore. The date has been finalized. It's 25th August. It's a Sunday. Those desirous of meeting me in Singapore can drop a message to the WhatsApp number given below or contact my team by an email. My team would reach out to you and we will assure you of our best services. For English and Hindi, there will be a separate meeting. See you in Singapore. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.